Happy Friday out there, Team 42. It's your skipper here, Darius Delta, present our macro minute for Friday, January 10th, 2025. As always, we'll start with the executive summary from today's lead-off morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, how will stocks react as the labor market moderates from here? Our answers are the December jobs report was unequivocally hawkish, surprising to the upside on non-farm payrolls and to the downside on the unemployment rate. Stocks and bonds alike continued selling off today as investors digest the likelihood of a less supportive Fed. We would not extrapolate the reacceleration in private sector labor income growth as sustainable, given our expectation for the labor market to moderate over the medium term. That represents likely reprieve from the trending hawkish repricing of the Treasury bond market. We think the J. Powell Fed will choose to support the labor market if it deteriorates further in the face of firming inflation, at least in the first half of 2025. Belated clarity regarding the contours of the great many fiscal and regulatory policy changes may cause them to adopt a different reaction function, be it neutral or hawkish, in the second half of 2025. If we are wrong in the labor market because it fails to moderate further, then risk assets will likely crash in 2025 because the hawkish repricing of the Treasury bond market will continue unabated, exacerbate U.S. dollar strength, and contribute to a global refinancing air pocket via declining global liquidity. For what it's worth, our fair value estimate for the 10-year is over 5.5%. That's a lot of basis points from here. So as always, we'll wrap up with the question from our community. This is as DD, I would appreciate your thoughts. What would you think the reaction of global markets might be if our government decided to wipe out the Fed's balance sheet holdings by simply canceling the offsetting debt that they are holding? Thanks. So a couple of things with this. One, that would be illegal. I want to say I forget the Latin word for it. There's a Latin word or phrase for in the bond market for treating all the securities the same. So just because the Fed owns a particular Treasury security doesn't mean that you could provide special treatment for that particular Treasury security above, the Treasury securities that are held by other investors. So you have to treat them all the same. That's consistent with U.S. Sort of U.S. bond law, international bond law. So that's step one. Even if that was incorrect, step two, if we did wipe out, let's say we were able to, sort of treat the securities that the Fed owns differently from the rest of the market, what would ultimately happen is you would see a reduction in money supply. And that would obviously drain liquidity because don't forget, if you cancel out something on the asset side of the Fed's balance sheet, i.e. these Treasury securities, you must also cancel out something on the liability side of the Fed's balance sheet, which means bank reserves. You're going to have a significant decline in bank reserves if you were to pursue this policy. So that's a long-winded way of saying if you think that they're going to come in and try to cancel U.S. debt in order to get the U.S.'s fiscal house in order, there are some complications associated with that, both legally and also from a monetary perspective that may actually make the problem worse, not better. So I don't think this is the path that they're going to take. I didn't think it was a high probability path to begin with, but it's certainly, in our opinion, it's not the path that they're going to take to try to get the U.S.'s fiscal house in order. So we'll wrap it up there. Darius Dell presenting our macro minute for Friday, January 10th, 2024. Everyone have a wonderful day out there. Best of luck. And and our thoughts and prayers. I hate saying thoughts and prayers because what does that even mean? But I want to know that all of our clients out there and friends out there in LA, we're thinking about you with these fires and whatnot. So if you guys can donate, please do. And if not, we'll catch you back here on Monday. Everyone have a wonderful weekend out there. Cheers.